Hello everybody, welcome to Bitcoin Not Crypto. You can find me on Twitter X at ForrestHodl. And in today's video, I'm going to go over MicroStrategy's new release of their preferred shares. I've collected a bunch of data and research from their press release about their new share offering. Also, Ben Workman on Twitter did a very good thread about this, and Jeff Park also posted a picture with some interesting insights into this. And I've kind of condensed all of that, taken the best parts, and I'll add some of my own thoughts and information as well. So this should give you a vast overlay of what this is going to look like now that we have some more information about what these preferreds are, like all of the specifics of these preferred shares. So they'll be issued under stock ticker STRK, that's strike, and they're a preferred share. So they fall kind of in between the equity and a bond. They're senior to equity in a liquidation event. They might receive some cash or some money back if something like that happened, but bonds are senior to them, so likely the bondholders would get that. Anyway, there's a certain demographic, a certain type of investor that is interested in preferred, and the difference with preferred is that they pay a dividend. And so it's going to attract a type of investor that is looking for cash flows or income and less volatility. So some of the volatility of MicroStrategy will be stripped out in exchange for a consistent dividend. So I'm just going to try to go over some of the details. It's pretty hard to chronologically do this. There's a lot of different aspects to learn. I'm just going to try to be as concise as I possibly can. So this is the issuance of a perpetual strike preferred stock. So within this preferred stock is the option to convert into common Class A shares. And they're going to convert at a 10-to-1. So you'd have to own 10 shares of a preferred to get 1 share of common. So this effectively creates a strike price on the offering at $1,000 because the initial offering of these preferred shares will be at $100 a share. Now, these will trade on the secondary market, the public market. There are some restrictions for retail getting into it. I think your position size needs to be a certain size or something like that. So the initial offering of all of these preferreds is $250 million, and it will be comprised of 2.5 million preferred shares. And this might get bigger. This might get changed a little bit. This isn't fully set in stone. This is just another press release with more additional information of how they plan to issue these preferred shares. So the dividend payout for the preferred shares is 8%. So that's 8% on that initial $100 share price. So essentially you buy one of these, they're going to pay you $8 annually. And I believe they pay out quarterly. So it gets that $8 will get split up into quarterly payments. This 8%, it's on that initial value and it doesn't fluctuate. So if you're able to get that share price, that preferred share, under $100 on the secondary market, your yield, your annual yield would actually be a higher percent. You'd still get paid out the exact same amount of money, but the yield percentage would be higher because of your cost basis. And inversely, if the share price of these preferreds start trading up higher, your percentage is going to go down. One thing that's interesting about this dividend is it's actually at MicroStrategy's discretion what they pay this with. They can settle these dividend payments in cash or MicroStrategy shares. So they could actually pay you in shares of MicroStrategy. It's very, very interesting. But more likely, they would probably do ATM, so just issue at the market, sell those shares into the market and raise cash, and then they can kind of do that a little more at their discretion, as opposed to quarterly when these dividends come due, immediately have to pay no matter what the price is and issue shares at that point. So they're probably going to think ahead with having some cash on the side to be able to pay the dividends of these preferred. Another clause here in the dividend is that MicroStrategy does retain discretion of whether dividends are paid. These are not an absolute guarantee. However, it it basically kind of is for all intents and purposes. If they don't pay them, they still owe them, so that it kind of accumulates and they have to pay them at a future date. And of course, it would be a bad look for the preferred shares, and they trade on the secondary market, so they're going to want to pay these dividends. There's no maturity on when it comes to the conversion of these preferred shares. They truly are perpetual, which means they can go on basically indefinitely as long as MicroStrategy is a company. So unlike the convertible bonds, where when that bond comes to its due date, it either needs to convert into shares or it needs to be cash settled as the initial debt needs to be repaid. There are a couple little clauses here. This is, again, probably just not needed information, but I'll say it anyway. If the amount of preferred shares goes down to 62.5 million or 25% of the initial offering, which means that a lot of these have converted, or the price of the preferred shares have gone down so low that MicroStrategy could call to convert into common shares. So they don't have these convert clauses like they do with the convertible bonds, where they were actually able to, after a certain amount of time of basically the bond or the underlying shares in the bond. The only other potential trigger is if some tax laws change or how the treatment of preferred stock changes. So again, this is probably just unlikely. We can really expect these to be perpetual and go into the future basically indefinitely. There's no reason to think that these will ever be converted. So Ben laid out the numbers here. I'm just going to read out from his tweet. He says, this offering is effectively collecting capital at a common stock price of $1,000 per share. So they're collecting a huge amount of capital from issuing these preferred stocks because of the amount of dilution that they'll create, right? If we expect them to be fully diluted into common shares, it is essentially issuing shares today at $1,000 per share. So the MicroStrategy common price right now, he says, is 337.4 as of writing this. So this means that MSTR is collecting capital at a premium of 196.4%. Massively accretive to the Bitcoin per share metric, far beyond even the best converts we have seen, which had a 55% premium associated with them. And then there's also the $20 million of annual dividends that they have to pay out. So this is really interesting, right? If we're into MicroStrategy, we understand that they've been issuing equity at the market. They've used that equity to fund their business and to buy Bitcoin, predominantly buy Bitcoin, but it's at their discretion what they do with the funds raised. They could issue ATM, they could issue shares to the market to fund the preferred dividends, right? As I said earlier. So Ben lays this out really well here for this initial offering. For scale, raising 20 million, which is what they would need to raise to pay the annual dividend for this, of Class A common share ATM essentially equates to MicroStrategy turning on the ATM for 2 minutes in an entire year. So this is something you'd never notice. And he's talking about equating to it, turning it on for 2 minutes based on volume in the equity market. So to expand on what he says here, there needs to be buyers in the equity market that will accept the ATM. So this is basically how fast they could sell into the market, and it would only take 2 minutes to raise $20 million. In the last 60 days of 2024, they raised $17.9 billion through issuing equity. Everybody's been complaining about the share price of MicroStrategy, how it's kind of gone sideways. They've raised an unbelievable amount of money while the share price has not gone super high in that time. But they were able to buy Bitcoin for that, which is setting them up for this next leg of issuing other financial products like these preferred. And that will create some leverage within their system to elevate their price on the moves of Bitcoin. So they're able to raise a huge amount of money through this. So basically, the preferred dividends that they pay out are just nothing to worry about because they've been able to raise so much money in the past. They'll be able to do that in the future. So in the future, what's very interesting about this as well is this is just an initial offering of the preferred. And what they could do is they could actually file to be able to issue ATM of preferred shares, so they could sell into the market. And what's very interesting about this is that the share price for these preferred could actually go up. So the reasons that they would go up is because there's demand for them. And the other reason that it could go up is if interest rates for other debt instruments goes down. So because this preferred share price has a fixed rate, the dividend doesn't go down, right? It's not a bond. It is a preferred share with a fixed dividend amount of $8 per year per share. That means that it's 8% when it's $100, but if interest rates go down, it's going to have an inverse effect to the price of these shares because that yield becomes more competitive and more interesting to people seeking yield. So the yield will also go down and the share price will go up because of that. The share price going up forces the yield down. The amount, right, stays at $8 per $100 share, but the $100 goes up, and therefore that it is no longer 8% that they're getting back because the share price has increased. And when the share price is increased, if they're able to do ATM of preferred shares, they can actually, it can be more accretive. They can get more money today because the share price is higher for these preferred shares, and then they can buy Bitcoin again with that. So I'm going to break this down after I read it out, but Ben has done another amazing calculation here. So he says if they use the common stock ATM, they will sell $2 billion worth of shares, meaning they sold 444,444 shares of common stock to acquire 2 billion in Bitcoin. So preferred is convertible to common at a 1 to 10 per share. So if we divide the total amount by 10, it means that he will effectively issue $1,739,130 of common shares to raise the same $2 billion. So this is a lot less dilutive by issuing this preferred because of the dividend. Okay, so now Ben has done some calculations of how effective this is in share dilution based on having to pay the dividend of these preferred, right? We don't want to just think it's just that even across the board. There's also these dividend payments that need to happen. So those could create some dilution or just extraction of money from MicroStrategy because they need to pay that dividend. So here's his example. If the share price was $450 and never moved into the future, that would mean that they would have more than 8 years before the same number of common shares would be issued from this offering as using the common stock ATM. So it takes 4 years for it to become as equal to as dilutive as issuing those preferreds to issuing common stock. So that's a long time frame right there. But that's with the share price staying dead even at 450. Let's assume that MicroStrategy performs at 5%. That's the underlying equity, performs at 5% growth a year. This number of years extends out to 11 years. If a MicroStrategy grows at 10% per year, it extends to 16 years. And if you assume MicroStrategy performs at 15% growth a year, then he wasn't even able to calculate it. He calculated it out to 62 years, but it wasn't even close to break even. So this is incredibly interesting how much, and we can expect, MicroStrategy to perform very well because what it does is it holds Bitcoin underneath it. And us being MicroStrategy holders, we value and understand Bitcoin and historically see how well Bitcoin has done. We've historically seen how well MicroStrategy has done as well, and they've actually outperformed for a lot of the time. So I'm going to link Ben's thread below, which I I read out a lot of it, and I've extrapolated a little bit on it, and I'm also going to link Jeff Park's post below as well, so you can kind of expand a little bit deeper, get a little deeper into the thinking here. But to really sum it up, we can see that this is very accretive to Bitcoin, the purchase of Bitcoin by MicroStrategy right now. And the reason, of course, that you can see they've been hammering the ATM, they've issued converts, they've created this product, the preferred shares. They are doing as much as they possibly can right now to acquire as much Bitcoin as possible, because it is beneficial to get it at a lower price. And we can see historically that yes, Bitcoin does go like this. It doesn't go straight up. It goes up and to the right, but has downward swings as well. 3 years of bull market, 1 year of bear market, all of this kind of stuff. But MicroStrategy is really just saying, let's get as much of this as possible. They're in their accumulation phase. They're doing as much as they possibly can. And if you listened to this, you understand that the preferred shares, issuing these preferred shares, will be super accretive in the short term. And in the long term, paying this dividend out isn't going to affect it through dilution very much, and will continue to be effective in the long term, because they've been able to stack so much Bitcoin immediately because they receive all of that money from issuing these preferreds. We can also think a little bit more about this. One thing I wanted to add is that there are ETFs out there that are specifically, they buy preferred shares of companies, and these funds have different amounts of assets under management that will probably increase over time, and potentially the holdings could shift to favor this preferred stock if it does well, if it's something that people are wanting, and that could be a passive buying of this share, which will create an increase in price. And when they do the ATM of the preferred, that becomes more effective for accreting Bitcoin as the underlying of MicroStrategy. So hopefully that makes sense to everybody. I just wanted to also let everybody know that if they wanted to skip MicroStrategy, just buy Bitcoin, the best place to do that, in my opinion, is through the Bitcoin Well, which is a non-custodial platform. So you send them money, they send you Bitcoin directly to your hardware wallet, and there's non-KYC options available. They're available in Canada and the US with the lowest spread for a non-custodial exchange. If you want to protect that for generations to come, Stampseed is the best possible way to do that. They make a one-piece titanium plate that you stamp your seed phrase into, and it's easy to conceal. It's fireproof, crush-proof. Basically, you could throw anything at this thing. It's titanium is incredibly strong. It's the best possible way, in my opinion, to protect your seed phrase. And you can actually get 15% off of it if you use my code, which is BTC not crypto 15. And you can use the link in the description as well. So thanks everybody for watching. If you have any questions about these preferred stocks or anything else about MicroStrategy, comment them in the YouTube video and I'll be sure to answer them there. Thanks everybody, and we'll see you on the next one.